Good morning, everybody. Hey, welcome to this Wednesday. Happy Valentine's Day. Hope your week's going well so far as we look at yesterday's massive decline, worst day since March of last year. We'll talk about that and more when Dave joins us here in just a few seconds. But let's not forget that in the world we live, there are so many things that you and we have no control over. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that it truly lines up with where it should be with your current life circumstances. Give us a call, 863-382-0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
105.7 Highlands Light FM. That's calling there. We're at 8:40 now, 20 before 9. Time to check in to find out where your money is this morning. Some of it disappeared yesterday. If you're in equities, it just kind of went poof into the vacuum. Let's check in with Phillip Statler from Statler Financial Services in downtown Sebring and see whether or not there's a possibility that poof might come back today. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, doing well today. It looks like there's a possibility that it could bounce back this morning. We do have some green ink, but man, yesterday was a devastating day, would you say?
Oh, gosh, was it ever? You know, I was telling the story to somebody over a beer last night. A few years ago, we had a charity auction that I was doing, and somebody had donated a really, really pretty table. I mean, it was gorgeous. But the legs, they just had screwed some cheap Home Depot legs onto. It was kind of flimsy underneath it, but the tabletop was gorgeous. And that's kind of what the market's been. The legs underneath this rally, if we get one negative inflation report out and we can drop the Dow 525 points, I'd say we had some pretty flimsy legs on the table underneath us when we started this rally out. Wouldn't you agree?
I would, yeah, definitely. It didn't take much. Now I will say they've started to, kind of parch through the numbers and so they're lifting themselves back up today. But it definitely was a burn the barn yesterday on the news.
Oh, boy, was it. Just to quantify it so everybody is on the same page here together, the Dow fell 525 points yesterday. Standard & Poor's was down 69, but that was an even higher percentage than the Dow was. And the NASDAQ just took a really, really cold shower, down 287 points. That was a full 1.8% on one day. And all of that basically on a shift in conventional wisdom that, oh, gosh, golly, we're not going to get an interest rate decrease over the next couple of Federal Reserve meetings in all probability.
Well, that's true. And hey, let's don't leave the Russell 2000 out because it was the worst yesterday, down almost 4%, Dave. $81, 3.96% down yesterday.
And that pretty much is the tale of the tape. The more interest sensitive your company is, and small companies tend to be, well, the more you got hurt. And that fits into the old conventional wisdom. Higher interest rates mean lower asset prices. You see that in your house. We talked about mortgage. We'll talk about the mortgage applications in a minute. Well, the same thing happens to your equities. If they expect interest rates to stay high, well, the equities aren't worth as much as they were before that decision was made.
Yeah, that's right. They can't make as much money, and that's what it's all based on.
Absolutely. So that brings us up to this morning, and you kind of mentioned that maybe investors are thinking they overreacted by a little bit yesterday. Yesterday morning, after we got done talking, the National Federation of Independent Business put out their Small Business Optimism Index. That didn't help the mood of Wall Street any at 10. It actually curved downward a little steeper after that came out because small business is kind of pessimistic about the months ahead. And then this morning, about 7 a.m., the Mortgage Bankers Association reported their mortgage applications index for last week, and that didn't help our mood much either, did it?
No, it didn't. Applications fell about 2% for the week, but they were higher than the same week a year ago. So year over year, they were up about 12%. So that was good news. So here's how it kind of broke down, Dave. We saw that refis were down 2% for the week, and applications for mortgage for first time or for purchases of homes dropped 3%. for the week. Now, in both those cases, well, I'll tell you about it. The refis were higher than what they were even a same week a year ago. Now, home purchases are actually down about 12% from where they were the same week a year ago.
That's a surprise, given the fact that expectations of mortgage prices going up a year ago was really putting a cap on things. Did it say anything about whether the trend was continuing toward adjustable rate mortgages? But you and I both last week, when we read that piece, kind of said, well, that makes sense because everybody expects a year from now things to be lower.
Yeah, I didn't get a chance to actually get deep enough in there to see.
Okay. Yeah, that makes some sense. And given the fact that things are firming up in terms of mortgage rates, I guess I can almost understand a decrease. Other things going on. You and I have been talking about layoffs and whatnot. Big announcement yesterday. I was having a little bit of black humor fun with it. Yeah, your boss makes $1 billion one day, and the next day they fire you. CBS laying off 800 employees in the CBS Paramount combination. The layoffs are continuing, and they're starting to spread a little bit more out from the high-tech companies that overhired.
They are. Remember, we talked earlier this week or last week, I can't remember when, about layoffs and how that seems to be the theme in all the earnings reports when the outlook for the next quarter is, we're going to get more efficient. Efficiency means less jobs.
Absolutely. There were some stocks that did pretty well yesterday off of much as anything rumors. One of my favorite rumors is that the TV manufacturer Vizio was up 25% yesterday, didn't make it off of a report. Rumor got out that Walmart is talking about buying Vizio and making them their in-house brand of color TV. Well, nothing like having the nation's biggest retailer buy you to make your stock go through the roof, right?
That's right. That definitely would make people stand up and stock price go up for sure.
Offhand. There were a few reports that came out, and probably one of the shining stars of the bunch yesterday in an otherwise really crapola day was one that I didn't expect. Kind of the number 2 in the ride-sharing service. Lyft, I gather, is doing pretty well, huh?
Lyft had a good quarter. They posted earnings of 18 cents a share, which is 10 cents better than expected. The revenue was basically in line with expectations, and they had a pretty good forecast for upcoming quarters. And so they're getting a huge bump today, Dave, up 22% this morning.
Wow. Yeah, I had them up substantially in after-hours trading yesterday. I was kind of curious how they were doing as we got closer to the open. Who else we got out there?
So we got Airbnb reported as well. Airbnb came out, and they're not profitable yet. They lost 55 cents a share, which is pretty good compared to the expected to lose 62 cents a share. Revenue was slightly ahead of expectations. Revenue, I like this number. Revenue climbed 17% from the same quarter last year. That's a pretty big jump, for them. And so they're trading down. They were trading up earlier. They're trading down now, Dave. You never know. Down 6.5% this right now before we get going. Like I said, they were up a little earlier this morning. We do have a lot of
tough room to play, I think, isn't it?
It does. I do want to mention this before I get into some more earnings, because we talked about Lyft. Uber, they had their first profitable year. We talked about that, I think, last week. They unveiled a $7 billion share buyback program, which you can imagine people are liking that. So that news has got them trading up 7.5% this morning.
Ooh. And good reports from Lyft in a similar line of work with a buyback program. There's going to be a whole sector increase on that one, I'd imagine, right?
Yeah, definitely will be. We had Robinhood reported. They beat on earnings and revenue for the fourth quarter. They made a 3-cent profit, which is better than the 1-cent loss they were expected to do, and they're up all 14.7%, Dave.
That's not bad, given the fact that they were going through some rough times back about a year or so ago after the Reddit gang kind of deserted them for a while.
Yeah, that's right. Another popular online focus place is Zillow. Zillow reported they had earnings of 20 cents a share, which was better than the 12 cents that was expected. Revenue was about 20 million more than expected as well. And so they're up about 6.7% today. And we did have Kraft Heinz reported. And they beat by a penny a share, but they missed on revenue. And so they're down 3.8% this morning. I'm trying to see any big names, other names we got here. GoDaddy reported. Yep, they're the big website maker and domain name keeper. And they came in, revenue was in line with expectations. They matched pretty much across the board, it looks like. But they are, when you come in line, sometimes that's not good. They're down 2.7% this morning.
Under promise and overachieve sounds like the rule that we're expecting of the companies, right?
Exactly.
Kind of gets that way. Resetting the table, it was a true bloodbath yesterday with a in-your-face reaction to the increase in inflation yesterday morning. And really, in context, it wasn't that terribly bad. It was just worse than we expected, and the market just responded in spades. 45 minutes before we open, what are we looking at this morning? Do we overreact yesterday a little?
So we are getting a bump to the green, Dave, but let me just preface that because it's off the highs of this morning. So it is softly coming down slowly. The green ink is erasing, but it's still green, which is good. And that means we could probably open to the green this morning. We got the Dow up 1/4 point. We got the S&P 500 up almost 0.5%, and the NASDAQ 100 up 0.6%. The Russell 2000 is probably the biggest winner right now, up 1.1%. So we got green ink. Not sure if it's going to follow through all day long or not, but at least to start today, we'll have some. And then on the other side, we've got silver up about 0.1%, but still well below where it needs to be. It's at $22.18, and we've seen it up in the 24 and 25. So gold's down 1/4%. Crude oil, Dave, making another big jump, up 0.5% right now, but up well over $1 from yesterday. $78.25 a barrel right now.
I don't like the trend we're looking at on that. Tiny little bit. I've filled up with gas last night. My little 4-banger came to $34 to fill up my tank of gas, and I was kind of getting spoiled for a while. Overseas markets, the Asian Rim is reacting to China's stimulative measures for their economy. Everything was up. The mainland Chinese markets were up by like 1.25% at 6 a.m. when they closed this morning. Europe is kind of breathing a sigh of relief looking at our futures and saying, oh, good, it's not a major sell-off. Everybody's up in varying degrees. The overall index in Europe is up about 0.5% halfway through their trading day. I always say, if you're looking at these daily reports on the stock market and saying, oh, my God, looking at yesterday, it probably means you got way too much risk in your retirement portfolio. How do I find you to get the risk out of my retirement plans, Phillip?
Dave, risk is why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning, you and me, to see whether or not we can keep the green ink going. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Happy Valentine's Day. Talk to you again tomorrow. Take care. Bye now.